Good day, everyone. This is Gary Ender from ShrewdTrading.com with another free market update. We're looking at the S&P 500 right now. We're actually looking at a 4-hour chart of the S&P 500. A 4-hour chart is oftentimes a great time frame to look at to see what's happening within the market. It obviously gives you a little bit more detail than a daily chart does. If we start at the recent high that we had and we work all the way down to our low, we know that this high, this recent high that we just had last week, was a 62% retracement of this last down run. You see I have the Fibonacci levels on here. This would be the 38% retracement, the 50, and the 618, commonly called the 62% retracement. We worked our way up. We see the stall right here. We see the market stalling. Oftentimes we see it stall before it starts working down. We see some separation between price and the upper Bollinger Band here as well. Another clue that the market might want to move down. It moves down relatively hard in these two sessions, and we see the 10-period moving average rolling over. During all of this time, the shrewd trading model, the STM, is still in the bearish mode. It was starting to work its way back to a more neutral bias when we got up towards this high here, but it still was in the bearish mode. And then we see price working its way lower. We move down, we come back up a little bit. We see that we never pierced the 10-period moving average. As a matter of fact, let me move in a little closer on this. There we go. So we see that we move down, we come back up, we get stalled at the 10-period moving average again, and then we close yesterday, or we get down yesterday to this very important support level. We basically close at about that area as well. We also have the lower Bollinger Band on the 4-hour chart in that same area. So we see as this market moved up, we see this little mini swing low here, the little mini swing low here. We see the lower Bollinger Band here. This is clearly a pretty decent support level. A few things could happen. We could move back up, and maybe where price meets the 10-period moving average, it could fail again. We could go sideways for a little while so that we have the down move. We go into a continuation pattern and move sideways before breaking lower. Or we could just clean breakdown out of this in today's trading, today being the 26th of June, 2012. And of course, the final alternative is it catches support and moves up higher from here. I actually think that's the least likely outcome of this, though. So we'll be watching on this for a break of this very important level. I've been calling that the 1307 level. If we get a break below 1307, we will be looking down towards this recent low that we had here on the 4th of this month, and the low of that is 1266.74. If we go to a daily chart, we see that the lower Bollinger Band is in that same area that we just talked about in the 4-hour chart, the low on the 4th. We can see how price came down right to that support level, right around the 1307 area. And if it breaks through that, you can see very clearly on this daily chart where the next potential support levels will be. I talk about this in much greater detail on the morning check and on the shrewd check, which are both part of the market check feature on ShrewdTrading.com. If you're trading in the markets, you can benefit by being a subscriber to Market Check. The whole goal of Market Check is to keep the trader on the right side of the trade. This is Gary Ender. Be a shrewd trader.